got capital that shouldn't have got capital. A lot of people invested foolishly. They're going to lose their money. But we were going to go through a painful recession, certainly, as we digested and worked off those malinvestments and allowed capital to be reallocated to where it could be productively used, which meant labor, which meant their land, capital, whatever was involved in these businesses. And, of course, with all the wealth that was squandered, because remember, as people invested in these new companies, the money was just spent. It was squandered. It wasn't put away productively, so people lost real money. So people were going to have to come to terms with the fact that they lost money, and they were going to have to try to save and replace them. So there was going to be a big recession when George Bush came in. But rather than being honest and admitting that the Clinton era was a fantasy, was a boom, and now we had to live through the bust, and that would have been a perfect opportunity right away to repudiate what had happened under Clinton and say, look, Clinton didn't give us a good economy. We had a bubble economy. And now the bubble has burst, and we've got to clean up the Clinton mess, and it's not going to be fun. But instead of doing that, he was like, well, we need to stimulate the economy. We need to fight off this recession. Sounds familiar, right? So he wanted an economic stimulus. And what was the economic stimulus that we got out of Bush? Deficit spending. Cut taxes. Increase government spending. And Alan Greenspan cooperated and slashed interest rates down to 1%. And so we had massive monetary and fiscal stimulus, massive inflation. And what was the result? Well, we blew up another bubble, a bubble that was bigger than the one that just burst. And, of course, during that shallow recession that we had, and Bush was so proud of that, so proud of the fact that he kept the recession from being more substantial, we had record car sales. We had record auto sales. Well, where'd Americans get all the money for all these car sales and all these home sales? Well, they borrowed it all. We went into debt. We had a massive spending spree, the biggest spending spree in world history. We borrowed trillions. What do we do with the money? Spend it. We build houses. We remodeled our houses. We bought cars, appliances, furniture, gadgets, iPods and cell phones and plasma TVs, all sorts of things. We didn't make any of the stuff. We just borrowed the money to buy it. And our trade deficit just skyrocketed. I mean, we started running $60 billion a month trade deficits for years. And our savings rate went negative. And it went negative even after the government doctored the books and recalculated how we calculate savings. I mean, if they were calculating the savings rate the way they did 10 or 15 years ago, it would have been minus maybe 5 or 6%. But they changed it, and they decided to count certain things as savings that in the past they didn't count because they wanted to make the savings rate look higher. Although at some point no one even cared, I mean, whether we saved any money or not. No one thought that we had to save any money. So we had this huge bubble that was much bigger than the stock market bubble. And, of course, the major difference, and something that I pointed out repeatedly, was the leverage involved. I mean, when people bought stocks, they pretty much bought it with their own money. And if they got a margin account, maybe they had to put 50% down. And many of the brokerage firms were requiring higher margins on internet stocks. So when the bubble burst, the losses were pretty much confined to the people that made the bad bets. And at least when the losses happened, nobody tried to bail anybody out. If you lost money, you lost money. Right? There was no one looking to the government to get their money back because they bought a dot-com stock that went to zero. Right? None of the brokerage firms failed. Nobody failed because they had loaned money to people to buy real estate, to buy stocks. No. This time around, of course, everybody who bought real estate did it with somebody else's money. Very few people were paying 100%. Many people were buying real estate with none of their own money. People were buying real estate with nothing down. I mean, is it any surprise that people gambled when they had nothing to lose? And especially when they had so much to gain. Real estate prices were rising. At one point in California, they took a survey, I think back in 2005, and the average home buyer believed that his house was going to appreciate by 20% a year for the next 10 years. That was what was expected. Now, you think about, at the time, the average California home was selling for about $500,000, which was about 10 times what the average household actually earned, right? So, but these guys actually believed that if they bought that house, they would make $3 million over the next 10 years. That's what they believed. Now, is it any wonder that they lied on their mortgage to get that $3 million? Is it any wonder that they signed up for a teaser rate? You think they cared what happened to the loan 2 or 3 or 5 years from now? They didn't care what the reset was. They were going to be rich. All they had to do was buy the house and they were going to be rich. It didn't matter what the mortgage payment was going to be because the house would take care of it. In fact, if you figure what the average Californian expected to earn on house appreciation, it exceeded what he expected to earn from his job. You know, so it was like it used to be that you'd work hard and have a job so you can afford a house. But it became the fact that, well, if you have a house, you don't need a job.